Hey, good morning, ladies and gentlemen. This is Rick with Hit and Run Candlesticks. Today is Thursday, July 30th, 2020. I want to thank you for watching my video blog. I appreciate it. Big day today. Big week we have here. Jobless claims are to be reported today, and it does not sound like they are going to be very good. There's still stimulus going on. Big tech is still talking to Washington. We'll see how that goes. Mr. Powell said that he plans to do everything he can to help the economy, and plans no rate hike in the near future. Let's see, QCOM. Let's take a quick look at QCOM first. QCOM reported. There we are. QCOM reported. Man, it's up big time. We had some targets on QCOM based on the chart pattern up here and the fact we came from a morning star signal, little inside day, and then we started to pop up a little bit. We actually got into our 3/8 trap strategy here, and boom, look at that thing gap up. Well over our $96 and $100 targets here. In the room this morning, I will be talking about how we might look to trade QCOM. I'll be doing that in the live trading room today. In the meantime, I do have a few charts that I would like to go over with you that I'm adding to my watch list. And remember, these are not recommendations to buy. I'm just simply sharing what I'm putting on my watch list, and I may or may not trade today or next week. First things first, we better look at the market. So, based on the trend indicator, you can see that the SPY is clearly bullish. All green dots right in here. We had a little pullback that never broke its bullishness as far as the trend goes. Price action a little bullish. We started to put a nice little bottom in. We rallied up yesterday, did very well yesterday. Nice little breakout. And today it looks like we're going to open up a little bit lower, possibly even below yesterday's candle. Here's the bottom line. We closed below yesterday's candle. This could be trouble for the market. So be careful. Be careful on your trades here. Diamonds. Diamonds did not fare quite as well yesterday. We could not get over the T-line, and it even shows up one red dot here, suggesting that the diamonds are right at the edge of breaking our bullish trend based on our trend indicator. Looks like we're going to open up well below yesterday's candle. That's not sounding too good. Now, there's a little bit of support right in here. I would even go so far to say we have support around 260.80. Of course, if we get below 260.80 close, that is, below 260.80, below 260.80, we could have a real problem on our hands. So keep an eye on the diamonds. Qs closed slightly over the T-line, just slightly, but it didn't really change our, wrong one. It certainly didn't change our trend that much. We're still looking to the downside. Again, we get below yesterday's candle, then that we may have to run down and test these two candles in here a couple days ago. Honestly, below 256.50, give or take some pennies. I don't think the market's going to like this too much. And what I think is the most valuable chart to be watching right now is the FNGU chart. This is the ETF for the FANG big tech stocks. You can see here we've created somewhat of a little bit of a wedge on the FANG stocks. Price action has. We're flirting with our movable trend line. We've got a couple of red dots here, a couple of green dots kind of mixed in. I think it's going to be very, very, very important to watch what happens here. We start to break down, that could be telling a big story. We move up, that will tell a big story as well. As long as we're stuck in this tight little range, maybe a little caution on trading. I remind everybody in the trading room from time to time that, you don't have to not only trade every day, you don't have to. You don't have to be in any positions at any given time. You can be all cash. Cash is a position. So I know traders, funny thing about traders, they decide one day they want to be a trader. They get all their tools, they learn everything they learn, and for some reason they work harder at trading than they ever worked in their job in their life. You don't have to do that. Take a day off from time to time. Know when you should be trading and when you shouldn't be. Might not be the best time right now. Cash is a position. Alrighty, one last chart and then we'll look at some charts for today. VXX. We were watching VXX yesterday and the day before. Pretty close because we were tapping on a double bottom here. Well, double bottoms aren't really worth much unless you get price action to go with it. Well, look where we're opening up today. We're opening up here about 29.60 or so. Price action is starting to shake, right? Let's look at a 15-minute chart, and you can see how we closed yesterday. Nice little bottom put in here. We closed a reasonably good bottom, and you can see today, here we are up 29.74. That first line wasn't correct. So we're popping up pretty good here. As far as the trend indicator goes, those green dots, they turned red. They are going to be green today. If we look at the hourly chart, we have clearly broken out of the hourly chart, and this is a chart that I've looked at in the trading room, going from 15 to hourly. I've said many times here on the last few days, if we can close in the hourly chart and turn these red dots green, then I will be taking VXX very seriously and be looking for a trade. So now that we've broken out, what we're going to look for is our basic, very typical chart pattern where we go up and we pull back, and then we're going to start looking for buyers stepping in. So here is our up move right now. Let's look for a little bit of consolidation, and then we're going to look for some green shoots to start giving us buy signals. I will be watching LTA scanner, the live trading alert scanner, very, very closely on this. I've got several scans set up, and I've got them set up on the intraday watching VXX, and I will be watching that for chart pattern setups to trigger me to get in. Speaking of live trading alerts, one of the best ones, I think, if you're at all interested and if you're one of the users of it, is it's number one on the list. You don't even have to build it. You just go click on it, and there it is for you. It's number one. It's the V-Stop 3/8 trap right in here. These right here, these are just windows I have for different areas like oil, mobile payments, and bank stocks. And they were rocking yesterday. They were knocking it dead. So some good money was made there by many, many members in the trading room. Okay. Also, Ed Carter from Live Trading Alerts announced yesterday that he is offering a 14-day free trial to Live Trading Alerts. 14-day free trial. No strings attached. He's not even going to ask for a credit card or anything. Just 14-day free trial. Go down below after you watch this video. Go down below, and I will have a link there for you. Thank you very much, Ed, for taking care of us. All right, let's take a look at some stocks here. Sorry, that took about 9.5 minutes to get to some trades, but we'll, sorry about that. All right, OIH acted very good yesterday. Kind of looks like we're opening up maybe around 130, 190 up here. I'm looking for a 144.35 target. First target, nice little base hit, and then we'll reevaluate on the way up. Right now, I can see that the trend indicator is up, green, working good. I can see that price has done just what we would have liked it to do. We've got a nice little bottom here. Let's make that smaller. There we go. A nice little bottom. Here we've rallied up, pulled back to a beautiful flag that could have been bought, popped up, and now we have a little, some tight consolidation. Pretty much a pop out of the box setting up. Of course, we still need the pop. We still need that pop to move up. Great consolidation here. This looks like a nice little buying area. Yesterday, put in a nice little bullish Romy. We're approaching the trend line, and that trend line is based only on the trend indicator here. So I'll be looking for this. And actually, I think I already own OIH, actually. And we'll be looking for it to get up to 144.35 and then possibly higher. Visa. I picked up some Visa at the close yesterday based on yesterday's candle. We're opening up, looks like inside day here. So what I will be doing now is shopping to add to it inside this area, as long as I can see that it's going to be able to hold. It has to prove that it can hold in here. So I'll be looking for an inside day buy. Ideally, hey, pick up a little bit less, lower my cost in here. Watch that breakout. It's going to have to break out to make any money at all. And then we'll be looking for 206.65-ish, something like that, followed by 213.50-ish, something up in that area. That would make a very nice trade on Visa. That's one that was coming up on the mobile payments yesterday. And let's see, one more here, SIG, S-I-G, SIG. I've also picked these where the earnings, they're a little bit further out. Now that we've cleared some earnings, we don't have to worry about it so much. So let's draw a line here. I'm just using that 17 EMA or our trend indicator trend line here. You can see how it's working. So we broke out to the upside right there, and all through here, just nothing but consolidation. That's all that is. So I guess what we're going to be looking for is a breakout. We've got a top, a top, a top, three nice little touches. Fourth one came awfully close. So what we'll be looking for here is a breakout. We get that breakout, and we may buy the breakout. We'll also look for consolidation to the right, and then we'll look for follow through up to about 1560 here, 1560. SFY, another nice trade. By the way, this is, I can put up the whole 3/8, the full 3/8 trap package here. Here's my 3 EMA, and you can see how we're trapped right in here. This is part of our 3/8 trap trade. Now I'm not going to leave this up because it just messes up the chart, I think. Dirties it up. But you can see how this is setting up in that 3/8 trap. Here we rally up and see we pull back, and right in there we're finding support. That's what we're looking for. We're finding support. We're looking for that bullish candle. We're looking for that trap, that line right in there. Right in here becomes a buy. Breakout becomes a buy. Target in this case is 26.45-ish, 26.45. You can see how this is starting to create a little bit of a rounded bottom there. A little bit of a rounded bottom starting to move up. FITB. This was another one coming up on our banking stocks yesterday. Here we've rallied up from this bottom. Clearly in a downtrend based on our trend indicator. You can see the red dots. Here we've started to turn green. So let's put a green line in there. There's our green line right there. Our trend has changed. We have now broken that downtrend, and you can see that we've just pretty much gone sideways here, and it looks like we broke out yesterday. So what we will be looking for today is maybe an inside day buy with a target running up near 2280. Now, keep in mind that when I look at targets like this, for my trading plan, I will take base hits along the way. So I'm going to take some base hits in there. Put some money in the pocket. No matter how many shares or contracts I buy, I will never end up here with that many, because I will be peeling some off as we go up, protecting some of that money. That is a wonderful strategy, and it works out very, very well. FAST, F-A-S-T. What a beautiful chart in FAST. First thing I want to take a look at here is how this is forming a J-hook. J-hook is when you have a rally, and you can see how it, just a slight little pullback, and it's starting to look like it's ready to move up. That's a continuation pattern. And this is the whole continuation pattern. It can be several little different patterns, but they're all basically the same. They're all up, back, up. Different names for some of them. There are some that look more like a flag, maybe some more look like a pennant, some that look like an ascending triangle. Bottom line, they're all continuation patterns. This is just a J-hook. J-hook is where it's up, and we just make a nice little rounded bottom up, like a little bitty cup, maybe, a little bitty cup. Then we're looking for consolidation. That would be, I think, a perfect setup. Consolidation, maybe making a little bitty handle, and then up we go. So we call that a J-hook. All right, one more here, COF. COF. This also came up in our mobile payments alert from Live Trading Alerts. And let's look at this here. See, we have this. Well, first, let's get this downtrend in place. See that downtrend? This is one of our trade strategies where we flip from a downtrend to a uptrend. So here we're breaking that downtrend is what we're doing. One of the alerts here, not one of these particular ones, but one of the alerts points it out. And then it looks like here we're up, and a little bit of consolidation here with a little bit of a pullback, create a little morning star signal followed by a bullish engulf. And now we're putting in a very nice, what we call a pop out of the box chart pattern. That's an excellent, excellent chart pattern. Although I want to remind everybody, no chart pattern is guaranteed to work 100% of the time. We have discovered that this is one of the chart patterns that does have a high percentage of working out if it's traded correctly. So here we've got a nice little pop out of the box. I'll look to possibly be entering it somewhere in this area like that. Maybe I might have to wait till it breaks out in case maybe I miss it. Either way, I'm looking for 75.10 as a base hit or a target, followed by follow through. We'll have to revisit this chart, but we could see follow through back up to 79, 80 bucks up here on COF. Alrighty. Again, I want to remind you that one of the biggest charts you need to watch is this FNGU. Also, keep an eye on VXX for any volatility or fear coming in or coming out of the market. Again, this is Rick with Hit and Run Candlesticks. I want to thank you so very much for watching our video blog. And if I don't see you in the trading room today, I'll see you tomorrow here on the video blog. Thank you. Everyone have a great day.